So when you look at the chart right now, we can see that the price is coming from a clear downtrend, and then after it formed this 3 candlestick pattern. Okay, this is 1, 2, and then 3. We have this big bearish candle, a small tiny candle followed by this big bullish candle, and then we have a clear wave up. So that candlestick pattern formed by 3 bars is what we call a morning star pattern. It occurs in a downtrend, and it signifies that there is a potential bottom and therefore a signal to buy to catch a new wave up. So let us look at this morning star pattern in detail. So we are going to be studying the morning star pattern, okay? And the morning star pattern looks exactly like this. We have this, it is a 3-bar candlestick pattern, and it occurs in a downtrend, signified by this big price movement down, small candle, big price movement up, and then a new wave up. Okay. So a morning star is a 3-bar pattern that can provide an early indication of a reversal from a bearish to a bullish trend, and it is the inverse of the evening star pattern. So a morning star pattern occurs in a downtrend, and then it signifies a potential bottom and therefore a signal to buy to catch a new bullish trend, while the evening star pattern occurs in an uptrend, and it signifies a potential top, and then we expect a new wave down to catch the bearish trend. So the pattern represents a potential bottom and therefore potential signal to buy, and it has the following characteristics. So before we go to the characteristics, we can see right here in this image that we have a clear downtrend as characteristic number 1, and then number 2 we get a big bearish candle, and then number 3 we get a gap down, number 4 we get a small candle bullish or bearish, and then we get a gap up followed by a big bullish candle, which is then following a new trend. Okay, so let us look at the characteristics. So number 1 is that we expect a clear downtrend. Okay, that is characteristic number 1. And then we expect a long bearish candle within this downtrend, which is right here. And then we get a gap down, which is right here. And then we get a small candle, which is either bullish or bearish, it doesn't matter. Okay. And then we get a small tiny candle, which is either bullish or bearish, and that doesn't matter. Okay. And then followed by a gap up, then followed by this big bullish candle. Okay. Up, then followed by a long bullish candle, which confirms the morning star pattern, and then we get a wave up. So again, a big bearish candle, gap down, small tiny candle bullish or bearish, then gap up, then we have a big bullish candle, which signifies that the pattern has been confirmed, and then we can take the trade. Okay. So when we look at the chart right here again, we can look at our pattern which was formed, and this is the one right here. We can see that we got a clear downtrend, which was followed by getting this big bearish candle, followed by this tiny candle, then a big bullish candle, which confirmed the morning star pattern, and then we expected to get a change in trend. So here, the entry point was around here, followed by a stop loss, and then we can catch a trade to up to this previous resistance level. So these patterns, morning star and evening star, are not so common in Forex, but they are highly common in stocks. Okay, so we can re-echo it. We have a downtrend. Okay, on a downtrend, we get this big bearish candle. Okay, then we get a gap down, and gap down means that the candle which is coming next does not open at the close of this previous candle. So it opens slightly lower. So we get a small candle and then followed by a big bullish candle. After this tiny candle, we get a gap up, and gap up means that this bullish candle will not open at the close of this tiny candle, but slightly higher. Then you get this bullish candle, and this confirms that the pattern has been formed, which is called a morning star. So here we expect that the trend is going to change from the bearish trend into a bullish trend. So what we do is that we put our buy stop order right above this previous big bullish candle, a stop loss, which is either 1.5 ATR or below the swing low of this tiny candle, and then followed by a new wave up. So that is what we call the morning star pattern. Thank you so much for watching this video, and I will see you in the next video. My name is Jordan. Don't forget to subscribe to my channel for more videos like this.